Commercial real estate's great, multifamily is great. Well, over the long term, 100%. That's why we're still buying real estate right now, even when I'm getting ready to show you this negative news and story in the multifamily industry. It's just the reality. Um, U.S. apartment demand plunges in the third quarter as new leasing stalls more than expected. Jay Parsons and Carl Whitaker did a really nice video. You can catch this anywhere you can find the Gray Report. Looking at, again, just some not great news for the multifamily industry. This is what we were talking about earlier. People just are not moving out. They're not looking for a new apartment. And
Yeah.
these new move-ins have just slowed significantly. And so we've got actually 2 quarters in a row, the slowest amount of absorption in 30 years
Yep.
that RealPage has been tracking this.
This article really stood out to me more than anyone this week because I think it runs parallel to the sentiment of a lot of investors.
Mm.
And after more than another week of interest rate and inflation speculations and worries, really, it's important to address the state of the multifamily market and the implications of our current environment. It's like what might happen next and what the most prudent decisions that investors can make. And if you ignore the kind of moderating force of the apartment market, then you can, then you want to have a clear eye about everything. I still think, and I think we framed this correctly, that that apartment assets are a great alternative consider in a volatile economy like this, but it's not like that we have conditions similar to 2021. And in some ways the more muted performance of the apartment market in this time is a little bit, it allows for investment without this hysterical speculation that we had in 2021. So that's
Yeah.
a silver lining in
Yeah.
of itself.
No. The silver lining, it should not be understated, Matt. I mean, all this sort of negativity is exciting from a buying perspective,
Mhm.
because I think there's going to be incredible opportunities as there's going to be like this lag between people who have just gone to the sidelines, and as conditions continue to improve and whether rates it's really probably cap rates normalize and we're already seeing that. We're already seeing cap rates normalize. I'm
Yeah.
seeing deals coming out in the 5 caps, and even in high 5 caps, even up to a 6 cap on
Mhm.
acquisition. So like the cap rates are normalizing. And I think there's going to be owners who are going to have to sell next year because of the way they finance these assets. And I think there's going to be a lot of buyers who are ready to pick them up, but not as many as there were in 2021. So I think it could be some great opportunities.
Yeah, to kind of catch like some of the knee-jerk reactions
I, I,
that people might have.
I think so. And again, I think if you just have a very steady, consistent strategy that's like adaptive to the market, but you're always in the market, and with a long-term mindset, you're going to avoid a lot of the pitfalls and making just some quick and rash decisions, whether that's getting in or getting out quickly.
Yeah.
It's like we're no steady, slow and steady wins the race. And
Mhm.
I think that's going to be beneficial to those who kind of have that mentality. But without a doubt, I mean, we've seen
Yeah.
rent growth decline and
Now,
earlier than expected. Sorry, go
yeah,
ahead, Matt.
yeah. No, and I do want to put in some caveats that maybe they're intended to soften that fact about a reduced occupancy down like a full 1% in what's usually a high demand quarter. So that's that is sobering news. But there are a couple of a couple of facts that may at least soften it. So firstly, demand is down, but rents have not dipped down to a commensurate degree. And if you look at the timing of demand and rent growth changes, there's a lot less lag than I expected between a change in occupancy and a change in rent growth. For example, you see very high demand in Q3 of last year, and those months also saw the highest rent growth. In Q4, the demand was lower and the rent growth was lower. I was expecting to see high demand in one quarter and then the following months would see lower rents, but it seems more concurrent than I expected, which is all to say that the negative demand that RealPage has recorded may not be a sign of bad things to come as much as a record of things that are already happened, that are already happening or have happened. So that's my first point. Secondly, as you can see in the line graph in the RealPage article, the current plunge in apartment demand from February to August of 2022 is almost a mirror image of the hyperactive climb in apartment demand from February to August of 2021. And it leaves us at a 4.4 vacancy, 4.4% vacancy, such that in absolute terms, and this is a direct quote from the Real Page article, the U.S. apartment market remains on firm footing. So that's a little bit of a, I sounded like Mayor Quimby there for, for a second. But yes, I think that the U.S. apartment does remain on firm footing because, apart from everything else, 4.4% vacancy is well within the historical trends. So having made my couple of points to pull this subject out of the dark speculation and into the sunshine, it is worth dwelling on the worst case scenarios and the potential risks that could follow. First, Jay Parsons reminds us that he correctly predicted that interest rates would not meaningfully drive up apartment demand. So that runs counter to the some of the speculation that we've read other places. And Jay Parsons is also not convinced that we're seeing less demand because rents are outpacing wages. He's not thinking that rents are too expensive, but he's also not thinking that mortgages are driving people into the apartment market. So he says, if it's not affordability, what is it? Well, soft leasing numbers coupled with weak home sales point to low consumer confidence. It's this idea that we talked about earlier. It's the broader economic environment that is making people uncertain. And he says, when people are uncertain, human nature is to go into wait and see mode. So yeah, they're frozen. They're not moving around. They're not generating that commerce that we said is kind of crucial to growth. And this wait and see attitude is keeping household formation low, which is what you noticed or what you noted earlier. So I think that that's what it is. It is low household formation brought upon by economic anxiety and a wait and see mode. Maybe I'm waiting on the official word to see if we're in a recession, but the worrying about recession, the uncertainty about what the future might hold is having an effect.
We'll hear about it the day after the election, I think.
That's a good hot take. I like that.
I mean,
Guess what, everyone?
oh, actually, things are bad, and it's somebody's fault, not ours.
Yeah.